Netflix is crumbling. That's our top story today on the Wall Report. I'm your host, Greta Wall. And Netflix shares are plunging, down more than $100 in today's session after the streaming giant reported its first subscriber loss in more than a decade. The company reported a net loss of 200,000 subscribers in Q1. That sharply missed its own forecast for a net gain of 2.5 million and analyst expectations for growth of 2.73 million. Netflix also forecasts that contraction will continue, expecting a loss of 2 million subscribers in Q2. The company did beat profit expectations last quarter, reporting earnings of $3.53 per share, but revenue came in short. And Netflix blamed what it's calling revenue growth headwinds on password sharing among subscribers and increased competition in the streaming space. Now, meantime, IBM shares are rallying today, up more than 7% after beating Q1 expectations and forecasting strong growth this year. The tech giant reported earnings of $1.40 per share on $14.2 billion in revenue. That was better than analyst expectations on both the top and bottom line. CEO Arvind Krishna said, quote, "Demand for hybrid cloud and AI drove growth in both software and consulting in the first quarter." IBM forecasts 2022 revenue growth at the high end of their outlook. Procter Gamble shares are also up today about 2.5% as price hikes helped boost the company's Q1 earnings. The consumer goods giant reported adjusted earnings of $1.33 per share on $19.38 billion in revenue. That was better than analyst expectations on the top and bottom line. A large part of that 7% year-over-year revenue increase, though, was due to higher prices. Sales volume, which strips out the impact of currency and price changes, rose just 3%. Procter & Gamble's healthcare sector saw the strongest growth, with organic sales up 16% year-over-year. The company did benefit from higher prices in both its baby and feminine care segments. Procter & Gamble also hiked its 2022 revenue outlook and said earnings will be at the lower end of its previously forecasted range. Now, oil prices are rebounding today on fresh supply concerns. West Texas Intermediate crude futures are up about 1% to over $103 per barrel. Brent crude futures also rising about 0.75% to $108 per barrel. And this rebound comes after U.S. crude stockpiles fell sharply last week as exports at the highest level in more than 2 years. The Energy Information Administration reporting inventory fell by 8 million barrels in the week ending April 15th. That sharply missed analyst expectations for an increase of 2.5 million barrels. The U.S. exported 4.3 million barrels of oil last week, which is the most since March of 2020, and at the same time, imports fell to the lowest level since April of 2021. A new report from OPEC Plus, meantime, shows the group produced 1.45 million barrels per day below its production target in March as Russian output fell. Russia is part of OPEC Plus, and then Libya has also been forced to shut down several oil facilities due to protest in the country. All of this creating new supply concerns in the oil market. Now, taking a look at the economic data of the day today, existing home sales fell for the second straight month in March. The National Association of Realtors reporting existing sales tumbled 2.7% last month to a seasonally adjusted annualized rate of 5.77 million units. Sales were down 4.5% compared to March of 2021, and February sales pace was also revised lower. The drop comes as prices and mortgage rates have both soared. The median price of an existing home sold last month hit a new record high of $375,300, up 15% year over year. And at the end of March, there were just 950,000 homes for sale, representing a 2-month supply at the current sales pace. A healthy market should have a 6-month supply. Sales of homes priced between $100,000 and $250,000 fell 21% annually, while sales of homes priced between $750,000 and $1 million jumped 30%, and home sales priced above $1 million were up 25% compared to a year ago. And meantime, mortgage demand is plummeting as rates do also continue to climb. The Mortgage Bankers Association reporting total application volume fell 5% last week and was down nearly 50% compared to a year ago. And the drop comes as the average 30-year contract mortgage rate rose to 5.2% from 5.13%. And that rate was just 3.2% a year ago. Refinance applications tumbled 8% weekly and plummeted 68% annually, while new purchase applications were down 3% last week and 14% lower compared to a year ago. And Q1 earnings season is just getting hot. Tesla shares are down about 3% today as the electric automaker gears up to report after the market close. The company already reported record high deliveries of more than 310,000 vehicles last quarter. Analysts are expecting revenue of more than $17.6 billion and earnings at $2.26 per share. United Airlines also reports earnings after the close today, shares rising more than 1% in the session ahead of those results. Be sure you're subscribed to my Coffee with Greta newsletter to get the details on the latest earnings reports ahead of the market open tomorrow morning, as well as any new market news. I'll see you all back here for the Wall Report at noon. Give this video a like before you go.